Let's get across what we are seeing on global markets. We're joined by Peter Maguire from trading.com. Pete, welcome to Monday. Good to have you back on the show. So let's take a look at the big movers that you've seen. In fact, we might bring that chart up just to illustrate what we're seeing at the moment. I mentioned some of those commodities certainly on the move.
Yeah. And it's had a big pullback, about 15% this year. So it's been a fantastic market as far as shorting. Silver on Friday was up over 6% for the day. It's at all-time highs of $57 an ounce. And if you're looking as far as gold, it's had a nice run up as well. Copper's through 11,000 a metric ton, Andrew, which is very, very strong. You've got aluminium and zinc also up. So I think the industrial metals will continue to rally in first quarter 26. And I'm expecting dynamic moves ahead for the precious metal market leading into 26.
All right, now there's talk of, we've taken out 4,000, 5,000. The next step, do you think that's realistic next year?
Yeah, I think so, Andrew. I think you'll see, first off, little brother, it was at 54 on Friday, and I've made a call of 60 by end of December that is, and it's now at 57.50. I feel as though it'll take out $60 this month. That's silver. And I feel as though gold, the way it's going, it'll be probably about a $4,500 handle. It's an 80% probability of a rate cut, maybe even 90% by the time they do have that decision in over a week. As far as Fed's concerned, that's going to turn the boost up on risk assets and of course precious metals. So I'm expecting a really nice rally into Christmas. Santa Claus will be riding his chariot with a lot of glee. And for anyone that's been long precious metals this year, you must be very, very happy because it's extraordinary. Silver's up the best part of 90%, and it's showtime.
Yeah, it has been an extraordinary run, but as you say, it may well continue at this point. So, Pete, helping boost precious metals, certainly rate cut expectations out of the States, they have increased to the point where the market's pricing an 85% chance the Fed will be cutting this month. Let's in fact take a look at those rate cut expectations chart and what you're seeing there and how that is going to play out for risk assets.
Well, I think first off, Andrew, let's put our mind back 10 days and we were under 20% probability of a rate cut. Now, this has been the most incredible reversal that anyone could imagine in the last 10 days, and it's crept up. All of a sudden, it's at 40, 50, 60, 70, now through nearly at 85 and approaching, zoning in on 90. So there's the first part of it. So I feel as though that if that does deliver, then naturally how that's going to play into risk assets. I'm expecting a very nice rally to the upside for US equities, that to continue. And, what's achievable over the next, this month could be really quite bullish. So there's the first part of the journey. And look at US dollar to continue to have a slide to the downside. And that'll force precious up, and I'm expecting crude to come under some pressure as well.
Yeah, particularly in light of OPEC essentially leaving output where it is too. Pete, let's take a look at, in terms of economic data, we've got a series of PMIs out this week as well. What are you seeing?
Yeah. We've got today's going to be a good day because I've got manufacturing PMI. That'll be released to the market, Andrew. It was down at 48.7 for October. Let's just see if it can crank above 50 as far as a growth frontier. And we've got services PMI coming out in the next few days. Sat at 52.4 in October. It might creep up. Remembering that, the manufacturing side versus services, big proportionally, it's a huge difference as far as the volume. And also I'm keeping a very close eye non-farm payrolls. Now that's going to be pushed back to the 16th of December. So there's those three inputs as far as Fed policy and what they're going to do. So yeah, it's a very, very big week and it's a big fortnight ahead.
And locally, Pete, the focus will be on quarterly read on GDP. What's the expectation there and how would you sum up where the Australian economy is sitting right now?
Well, first off, I don't think from a third quarter GDP perspective, I don't think it's going to have any impact as far as RBA decisions because we've got CPI sitting at 3.8% in October, Andrew. So let's just see how that number falls in. It's going to, again, minimal impact. I'd like to see growth. And naturally, you want to see the next part of the journey, which is a pullback in that CPI, dramatically under 3% from that target perspective, 2 to 3% handle. I noticed the lead-in story you were saying about housing and what we're seeing as far as growth. all of these factors naturally will impact CPI because from a rent perspective. So there are many inputs that go into the big picture, and you could debate it all day long. So fascinating subject.